other thing that's moving is the global bond yields. The US 10-year has moved to 4.7%. And Devin, while we are at this, 4.7% on the US 10-year, FIs continue to sell. Is this that kind of a market which is causing the pressure because of FII selling only? Or do you believe that it's also a bit of domestic factors which are playing out on markets?
Well, I think the FIIs have definitely, I think, taken the lead in selling, and they probably anticipated the fall in the rupee value faster because of the appreciation in the dollar. Now, in my understanding and from studying the past data, I find that somewhere we are close to making the bottom on both the currency fall as well as I think on the Nifty fall. Nifty somewhere around 23,200 and currency somewhere around 86.20 rupee to a dollar, I think are likely to be the level at which the market is expected to stabilize based on the past analysis that we have carried out. Should that happen, then in my viewpoint, I think the recovery will have to be seen in the market going forward. Because rest of the fundamentals in the economy and the market, they are not so bad as the fall is. Yes, of course, I think the argument for the valuation which are costly and the growth which is missing is definitely a valid argument, but it is not universal. It is in some pockets, definitely it is acceptable argument, particularly small and mid-sized companies, when the valuations are expensive and the growth is not so much impressive. That's where the argument will justify. But some of the large cap companies, in my viewpoint, Nifty 50 companies, they are reasonably attractive today with the PE going below 20. So in my viewpoint, I think around 18, 19, 20 PE, the market has always discovered the recovery. And that's what probably I would like to see. 23,200 on Nifty is very close at this point of time. And maybe I think we'll have to see how this level is surviving. If it does survive, then certainly we are talking about recovery in coming days.
Right. Ruchit, in the start of the show, we were, kind of seeing a recovery in the Nifty, but the Nifty has now slid to around 0.5% lower. The broader markets, the small cap 250 is down about 2.5%. Me as an investor or a viewer as an investor, what should one do right now?
I think one simple theory that we are suggesting our clients to look for such stocks which are not correcting in this kind of markets. There are some of the auto names such as Mahindra & Mahindra, if you see, Bharti Airtel, you see. There are some stocks which are showing relative outperformance in the falling market. I think that's where the strength lies. Either there's a good buying interest over there, or there's no selling pressure, or there's lack of selling interest over there, and that's why such stocks are outperforming. So I think one need to be very selective in stock picking in such a market. Rather than doing bottom fishing before we see any kind of reversals getting formed on the benchmark indices. I think one theory for stock picking that should work out in such market to look for outperforming names.
Okay. Deven, if I can come to you, 0.5% lower on the index, 0.5% lower more on the index, 1.5% on the bank Nifty. What is it that you would buy at this point? Because from what I understand, you're otherwise looking okay. I mean, in terms of the fundamentals, how the market is looking. So what is it that you would buy at this point, therefore?
Yes, I think importantly, the corrected valuation is possibly creating further opportunity to buy into portfolio of consumer lending companies, be it in NBFC space or be it in the corporate banking space, where they have reasonably good amount of momentum going, and at the same time, the higher amount of AUM book to talk about. Similarly, I think the companies which are interestingly positioned in the areas of engineering R&D space in the IT are the ones I think which are looking relatively more comfortable to us, because we see the visibility, we see the roadmap ahead for some of these companies. While I was making the consumer finance companies talk, I think housing finance is one particular area where I remain distinctly positive. Largely the fact that most of the important projects which are now coming up and where the consumer is spending money is definitely going to create higher amount of growth for housing finance. And should February rate reduction expectation materializes, then in such situation, I think I would see the trend continuing for rate reduction. And for next 6 to 8 quarters, the possibility of consumer lending companies could be relatively much better, including housing finance business. So some of these pockets look interesting. Some of the larger companies like Reliance, I think with the current valuation, they look interesting. Probably everything is now sold in the price. I think it's time to take some of the contra calls on some of these businesses.
Some specific calls coming to you from Deven Choksi. Thank you so much, both of you, for joining us. We'll let you go on that note.